Going live, bitches.
What is going on, everybody? Welcome to the Cardone Corner. We got Gary, myself, Samuel Arms, and then Christopher Inks ready to talk about markets and all the other fun things going on today. What is going on, Gary? What's going on, Chris?
Hey, what's up, man? Just kind of watching with with what's going on with the Bitcoin. I was on we were there last night with Gary with Spaces, and I mentioned that we would look to pull back to this area which we hit this morning and we're rallying up off of. So feeling pretty good about it so far.
They missed a good Spaces, didn't they? I thought that Spaces was awesome.
Oh, it was one of the I think it's one of the better ones we've had. I mean, it's a lot of good, clean conversation. A lot of real. I think for especially those who aren't, even for those that may be more well versed in Bitcoin, but especially for those that aren't, I think there was a lot of great information on it last night. And really, I think the great thing that we do with that space is we kind of get people out of the. I mean, we need maxis no matter what you do. Anytime you've got something new, you need maximalists to really kind of push, the narrative. But at the end of the day, whatever the thing we have, if it's going to be adopted by the mainstream, it usually is going to kind of change and mold, as Gary was mentioning last night, into what mainstream really wants. And I think that's the most important thing about Bitcoin, because you can want it to be a thing, but the reality of it is you're beholden to whatever it becomes. And so I think if you position yourself in that way, that's probably the greatest way to do it. At the end of the day, the only real freedom we have governments that come out and they say, oh, we're going to give you freedom. We're going to give you freedom. First of all, if government can give you or take away your freedom, it's not a right then. It's a privilege, okay? And if one party can do it, then another party can come in and do the opposite. The only real freedom is wealth. Wealth allows you to move around from place to place. It allows you to, if you don't like where you're at, to move on somewhere else. So I think, and not only does wealth allow that movement, that freedom of movement, but it also allows you time. And I think those are the two greatest things you can get from it. So if you're coming into Bitcoin, and I think the biggest thing from that is, okay, how does having Bitcoin contribute to freedom for me? How does it contribute to what real freedom is? Rather than hopefully, hoping that government provides it for you. It doesn't mean you shouldn't, push for it with government, but it means the reality of it is, at the end of the day, the only true freedom really is that wealth, because it gives you, again, freedom of movement, and it gives you time.
Well, and I guess that's one of the reasons why people freak out over these price fluctuations, because if you think, well, I'm just investing in freedom, I mean, what do you care, right? But if you're investing in, oh, I think I can just get rich quick without the mindset of investing in freedom, those are the people who stress out, right?
Yeah, exactly. Gary, I'm bringing up Gary again. He's a great example here because, Gary's been buying in big throughout this range. Everybody, on social media, short-term thinkers are freaking out, right? Because it hasn't made a new all-time high in, over a month and a half. Oh my God. But the reality of it is, when you're making an all-time high, usually you're going to get this kind of sideways movement, this little pullback for a month or maybe a couple of months before it, gathers enough strength to finally really push out. And so Gary, kind of out there putting his money where his mouth is, buying up, Bitcoin at these levels. And that's, I think that's a big part of the way that he's, approaching this, and the way that I think everybody should. I'm a trader too. So I have no problem, trading. I've kind of gotten out of my day trading days. Mostly I'm older now, larger positional or swing trades. But, day trading, if that's what you want to do, fine, go ahead and do it. But you absolutely should have some kind of bag of Bitcoin that you don't touch no matter what, that you just continue to contribute to. Because no matter how bad you screw it up as a trader, because you will, often, you're still going to have that. And that should be the goal at the end of the day.
Gary, do you have any comments on that before we kind of jump into some of these news headlines?
Yeah, no, I think I think that what Chris is saying really leads to some of the news that's coming out. And we're gonna share a few things on the screen here, but and I think we're gonna see continual flow of information, numbers, because most of these companies are public or they're running public funds. So this is going to be the first time really outside of MicroStrategy that we are going to see companies like Sequoia, Hightower just in fact, let's see if I can share the screen. Some information here. Hightower put, I think, 68 million into Bitcoin. Sequoia did one. Figure out how to share this properly. My computer's lagging because it's trying to do too many things.
Yeah, Chris, what did you think of Susquehanna? 1.3 billion in an ETF portfolio that was revealed.
Yeah, I mean, that's huge. As a percentage of their overall assets under management, I think they've got about 438 billion. It's not a large percentage, but this is what we've been talking about for quite a while now, is that you don't have to have, we don't need everybody getting involved. It just takes a couple of these bigger guys to really kind of get involved in Bitcoin, whether it's through Bitcoin spot or whether through the ETFs, to really kind of support price and push it higher. And so, 1.3 billion, again, as far as their assets under management, isn't a huge percentage of it. It's a very small percentage of it. But in terms of Bitcoin, to be holding 1.3 billion in those Bitcoin ETFs is, in one place is pretty big. Because we look at Michael Saylor, who's got, I think, 4 or 5 billion now, something like that. BlackRock's looks like it's potentially getting ready to flip GBTC as far as the ETFs holdings go. So I think it's big. I think it's huge news. And then Hightower, even it's 68 million, but Hightower is such a respected firm that seeing them kind of, when you're seeing them dive into it and when you're seeing Susquehanna dive into it, whatnot, if you're a competitor, I think that really gives you reason to go, well, maybe we should actually get into it, or maybe we should add some more to it. We don't want to kind of get left behind. Now, obviously, it's not going to be everybody, but, these big companies, it's kind of the way they work. You see people, you see their competitors start jumping on something, and then they're like, well, hell, we don't want to be left out. So I think it's a big thing.
Can you
give? Yeah, Sam, real quick. See, this is really, really important. Okay. The audience needs to understand that these advisors are competitive people. They are competing to manage some of the largest money in the world. There's, I think, 13,000 investment advisors managing $45 trillion of money. There's the top 10 boys who have been resisting Bitcoin, the vanguards of the world. They managed the top 10, 45 trillion. So once these people start understanding their bonuses, look, we just lost UBS and Morgan Stanley just lost their 2 heads of ETFs. What, you think they're leaving because they agree with the policy on not playing with Bitcoin? They are seeing their career, and they're seeing some of their buddies going, oh my God, this guy left a $7 million a year job to open a fund to play digital, and he's all in, and the guy's crushing it. Okay. And you start seeing 25, 30, 40% returns on investment and not a lot of human error risk. Dude, these people are this is going to become, it's called game theory, right? It's how quick can you get into the door before the other guy? Because these people are all measured against these indexes, right? They are all measured against the index. And if they can improve that index, just 100 basis points, 1% premium over what their buddies did down the street, dude, they're gold. Okay. They're just absolute gold. And these guys are making serious wedge. Okay. Serious wedge for them to focus on this. So to me, this is prime time for Bitcoin now. It has taken the world stage, and it's either going to fuck it up or it's going to become much bigger than anyone thinks it's going to become. I maintain I am the most bullish person about Bitcoin bullish on the long term that I know, because I just don't think we've always miscalculated the impact of technology. We grossly overestimate how quickly it happens. It happens slow, man. But when it happens and it really turns on, magic things happen, and you wake up with a company like NVIDIA out of nowhere worth $2 trillion, right? This is going to happen. We're going to see this replicated over and over and over again, in my opinion.
So are we at the tipping point, you think? Because I know a lot of people in the space have been waiting for this, where it's kind of like, oh, very all of a sudden, everyone's going to be allocating 1% or 0.1% of their giant portfolios to this stuff. And once some of these like managers and hedge funds and asset managers start getting in, I mean, next step is what? Pension funds, right? And even just 1% of some of these pension funds. So, like, are we on the tipping point? Are we this close to that kind of being realized?
I think I don't think that we're at the tipping point. I still think we're early. I see Chris nodding his head. I think we're literally early. I mean, Hightower put 68 million. They manage, I'm having a hard time pulling this data, but they manage a billion plus. And they're diversifying across these portfolios. Okay. They're putting into 8 ETFs. Like, everyone's going to win here. Everybody, oh, there's going to be one big ETF winner. It looks like they're all going to win.
Yeah. What is y'all's definition of not early? Like, Chris, what do you think is not, like, when are we not early anymore? How do you know?
For me, I'm looking for that greater, I'm looking for, again, what we're at least, what Gary and I have been talking about this year, since the ETFs launch, where you're getting the big guys kind of out there really pushing it. You get the big guys starting to invest in it. And again, I mean, I'll admit, Susquehanna, I would have expected that more toward Q3, to see that they already own what they do now. I was like, okay, so they're in there a bit. But I think we're going to get more of that type of thing as we get end of Q3, beginning of Q4 later this year. And I think that then starts to add into that, are we getting to where we're finally starting to get into a possible escalation, strong move up. Again, if you think in terms of technology is usually it usually comes in the form of an S curve. And that mid portion of that S is where you get the great adoption. That's that mainstream adoption. And that comes with the big money. So when we start seeing the big RIA platforms pushing these ETFs, and we see the big, funds and whatnot, like Susquehanna and others, really start, investing in them, I think that begins that mainstream adoption. So that's kind of what I'm looking for, to really kind of say, okay, I think we're finally getting to the point where we're no longer early. We're kind of right in time at that point. And so that would mean, if we're going to do that, that would mean we have a ton of upside still left overall. So we'll have to see how it plays out, but that's kind of what I'm looking for.
Gotcha. And what do you got pulled up for us, Gary?
Yeah. So, Sam, early or late, I don't know. I think we have an awful lot of players yet to come into this space. So there's no chance we're early. But here's, Susquehanna has been very active in the venture capital markets around digital in every industry, right? This is a new asset class they're coming into. They manage $438 billion. They deployed 1.3 into Bitcoin this month in the last quarter. And what I thought was interesting, I don't know if you guys can see this well, Grayscale got 1.09 billion from this group. Okay, of the 1.3, they put over $1 billion into Grayscale. And that kind of shocked me. Okay, I was like, really? It didn't go into Fidelity. It went into the most expensive ETF. Now, maybe there was a deal cut there, but the rest of it is they put 83 million into Fidelity. They put 23 million into BlackRock. ARC 21 picked up 536 million. ARC, nobody's talking about ARC. I think ARC's picking up a lot of really interesting volume. Valkyrie, 3.8 million. Bitwise 21 million, Invesco 11 million, VanEck 20 million, Wisdom Tree 19. 1, 2, 3, 4, 5, 6, 9 ETF investments. One player, one fund. Okay, what do you think the guy down the street's going to do when he's having lunch with the head of Sequoia's group, the Griffin down the street at Citadel in Miami? Dude, they're just getting all their docs in place now. Okay, like somebody had to sign at least 9 agreements here. I mean, this is being prepped now. We probably have many dozens of companies right now. I do not know what whales are selling into this market, but you guys are selling to the wealthiest people in the world. I think you're giving away your Bitcoin to these people cheap, because I don't think they're even close to being here. Look at this cat. Let's see if I can I do this? Well, this is a different matter. I do want to talk about this. Private equity, just private equity is moving into the accounting and tax world like you read about. I think in the next 18 months, you're going to see private equity buy up all the big accounting firms, Deloitte, PwC, KPMG. Let's see, where's do you guys remember seeing here we go. Can you see this?
Yeah.
What are you seeing? The accounting thing, or are you
The
seeing
130 billion Hightower?
Yeah. Okay, I got a big lag. So here's Hightower dumped 68 million, first move in the Bitcoin spot. Okay, check what they do. Let's go down a little bit. They put 44 million into Grayscale. Their largest investment is into Grayscale again. Chris, you're nodding your head. Is that weird to you? I would never have anticipated that, man.
Yeah, no, it did. Again, that along with Susquehanna, they're doing it. Really kind of caught me by surprise. But I mean, at the end of the day, Grayscale's been doing this for years. They've been in there for years. There's got to be, I'll have to do some digging on it. I didn't plan to have to do digging on it.
But it's weird, right? All we've heard is,
yeah,
Grayscale forced selling. Grayscale's fees are too high, blah, blah, blah. And here we have major investments, and the majority of it's going into Grayscale.
Yeah. I mean, it's I'm gonna have to definitely do some more research on that and figure out what's going on there. There's got to be something there other than, again, I don't know, maybe just the fact that Grayscale's, native, crypto native Bitcoin, maybe they've got some really good connections, some great relationships. Again, a lot of this stuff, as you know, Gary, with the higher, wealth and whatnot is done on relationships, right? Not necessarily on price. And so, there could be a lot of that going on there as well. I'll definitely have to look at that, figure it out.
Yeah. And Sam, and I just bring this other chart up because we talked about this yesterday, and the story goes here that I keep having conversations online and on these programs, and people trying to convince me that the strategy is to buy the meme coins and the altcoins, supercharge your return, because you can buy more of XYZ coin than you can Bitcoin. In thinking through this, because I've yet to really understand how this actually works, and I hear a lot of inconsistency on timing about when you go into the alts, when you come out of the alts, when you go into Bitcoin, when you come back out of Bitcoin, and you're rotating all this stuff. I mean, you have to be almost a genius just to keep up with the cycles. I'm not that smart. However, it reminded me of this example. Okay, in 1995 or 1990, somewhere in the 1993 to 1995 range, Berkshire Hathaway Preferred A was trading at $8,000. It was the most expensive stock. Like it was, 100 times more expensive than everything else. Exxon was $8 or something. And Warren would never reduce the price. He never cut the shares, split the shares. He's like, hey, the price is the price. Okay, this is the market cap of this company. Well, being the idiot with the horrible education that I had, thinking that buying 3 of something shitty is better than buying 1 or 1/10 of something that is gold, was a really smart move. I still do not remember the stocks that I bought, by the way, instead of buying this, because I was just too cheap, too white trash, too poorly educated to understand $8,000 would go up 76.5 times.
Yeah.
76.5 times. You guys are looking at Bitcoin. I think you're all wrong. Okay. This can absolutely continue to roll with extreme returns. If Berkshire Hathaway can do this, okay, because it hasn't diluted, it hasn't added a bunch of shares, it hasn't split, convoluted what the real value is. This stock now is $610,000. This is the crazy part. 42% of this is from Apple. Okay, so when all you guys are walking around going, well, I'm going to diversify into wealth, like this is not what happens. He's got 42% of his position, dude, in Apple. Okay, that is monster consolidation, monster consolidation. And two of his other holdings are into rails and energy. And they're a monster. This guy does not have like 37 different investment vehicles. So I just wanted to look at this, and I look at Bitcoin today at 50,000, 70,000, and I go, hey, could this do a 76x? Go do the math on this chart, okay? 76 times in, what is this, 20, 25 years? Dude, that's a great return. Okay, and you would never have had a headache on this investment. Look at this chart. Okay, this chart is just beautiful. I mean, it just goes up. Okay, yes, you would have had a little bit of a problem in 2020, like everybody else did. But if you just pull out of this thing, I mean, the chart's so impressive, it's actually hard to see on the screen. So I'll shut up. But Chris, can you build on that, man? Because I think it's such a really beautiful. And if I want to go do NVIDIA, I have another example. I could do NVIDIA, right? Probably I could do Apple. But I just think that people are, what's this called? The number, when people want to buy something cheaper, what's there's some kind of bias, right?
Yeah.
Number bias or something.
Yeah, basically price. Yeah, it's based on your at what it really comes down based on your, I hate to sound like a broke record, but your socioeconomic status. And so, if you're used to dealing with, income of $50,000 a year, then $100,000, 300,000, this kind of stuff sounds really huge to you. And so you get your bias, remains with that level, which you're comfortable to level, which I can't think what the exact term is at the moment, but yeah. And I think the great thing about investing, and this is coming from somebody who trades, basically for a living here, but also invest. And the great thing about investing is when you find something to invest in, what that should be is something that you actually believe in. And the reason why that's important is because if you're putting money into something you believe in, and you've got a longer time preference on it, you can wait 10, 20, 30 years, then what that does to you mentally and psychologically and emotionally is it gets you to actually to really kind of continue to invest it. So what you do is you put your money into it, and then you go, okay, now how can I make more money to put into it? And you keep doing that with that particular thing. And I think that's a lot of what we see. And then what happens is price continues to rally up, and then other people get your exposure. You're still saying, okay, what can I do this week, this month, this year to increase my free cash flow so that I can put more into that? And it just ends up building on itself. And, if you're picking, the right horse, it pays off like you're showing here with Berkshire, just exponentially, or even again with NVIDIA over the last, 5-10 years, whatever it's been, doing that. So I think, again, I think even if you're a trader, I'm just, man, I'm so, passionate about saying this, is that most traders don't make it. This is the reality. They don't, they don't learn at all really, or they learn from some really kind of poor places to learn from, but they're out. And so I'm not saying that you can't win if you're going to be a trader. You got to do it right, and you got to have all these things that you need to do. But if you're investing along the way as well, that's always going to kind of be there with you, right? And so even when the market pulls back, or we get recessions and whatnot, this is why it's so important to get involved in investing sooner. When you're do it as soon as you can, 18, 20 years old, start putting, don't worry if it's just $5 or $50 or whatever every month. Just start doing it, because whether it's trading, investing, or whatever, the real success comes from the real secret sauce. The one thing everybody wants to show you their special little way to trade or invest or whatever, but at the end of the day, the secret sauce is time and compounding. Time and compounding, that's what it is. So the sooner you can start doing it, the more time you have, the more compounding you can do along the way, which means the bigger your potential return. That's the real secret. It's nothing, hidden here, but it's the one thing that many people don't talk about.
Well, and that's what I'm kind of fascinated by is if you think about Berkshire Hathaway, like that was a 25-year time scale. How many people getting into this stuff are like, okay, time to wait 25 years? Like, how many people even have that mindset? How many people have the mindset of even waiting 5 years? I think everybody has this idea, and maybe it's traders. So maybe my question is like, are you even a trader if your goal is just, let me find something and plant my money and then just sit back and wait, right? Whereas I think a lot of people who love crypto are like, okay, how can I make a huge bag this cycle? Like, how do you weigh out that difference? Because the Berkshire Hathaway example is, just sit on it, right? And you're going to be looking, okay, if you're 20 now, okay, well, when you're 40, you're going to be really incredibly happy. But how many people really want to think like that and wait till they're 40 as opposed to, man, I actually next 3 years or in the next 6 months, I want to be, retiring on a yacht in the Mediterranean or something of the sort. It's a totally different mindset, right?
Yeah, I mean, it is. And I think, a lot of that's just human nature. I'm old enough to be around before social media, before internet was this big thing, global interconnectivity, stuff like that. But what I've noticed is since we've gotten that, and then now, especially with social media, this desire to do things quicker, the shortened time, shortened
Time scale or
well,
time preference.
yeah, but they shortened attention span. That's what I'm trying to get there. Get to TikTok's 5-second videos now. But I think all of this really kind of plays into it. And so what happens is, if you want to be serious, whether that's creating a business that does well for you, whether that's investing, whatnot, you have to change your whole mindset into this longer term thought process. And it's hard because everything around you is screaming quick, fast, hurry. If it's not today, it's not worth it.
Yeah, I agree with everything. In fact, you guys made me think about the question Sam had. Sam, how old are you? You're 24?
I'm 27.
27. The you've been to my home before, and if you notice really carefully, the trees around this property, I know this sounds like a really weird story, but the trees around the property, the lady that built this house, I really admire what she did because she had the vision of planting trees years and years and years ago. And she understood that these trees would take on a very different position relative to the house and the property as they matured. Okay. But what did she not do? She did not plant the seed and then not water it and not take care of it. She didn't constantly look at the tree and trim the shit out of it constantly and retrade it and replant it and move it around. Dude, she planted it in the right place the first time. She bought the right tree that would last 20 or 30 years. And now what do you see? You actually.
Did he freeze?
Days.
There you go. There you go.
What's that?
You froze for a second, so
Oh,
you left off at the wow, looking at the trees.
oh yeah. So you're looking at the trees today, but you got to remember that there were years when those trees didn't look so good, right? They had to grow into that position. So the 20 or 25 years, I think you got to remove your 20, 25 years and say, hey, what am I building here? Right? What am I creating here? Like every business I've ever built, I think about where I'm going. I don't think about where I am this second or, oh gosh, I'm not making enough cash. I have a shitty business. No, I have a business that's tapping into a very large addressable market. And once my thesis is correct, and if I can execute, and I don't keep changing my mind every 37 seconds, based on a I have a 10 or 15-year investment thesis, and then I go look at a chart, pop my screen back up if I can do this, but I go look at a chart that's got 1 day or 1 week or 1 month. I don't look at 1 minute charts. Why would I care about a 1 minute chart? Right? I don't look at the tree and go, oh, it's just not tall enough now. I need to jack this tree up. Let me bring some people in and they can do a better, relocation of the tree. It no longer serves me. So these are really simple analogies, man. I don't think you have to like get that complicated, right? To be successful. Chris, would you agree that it's just not that complicated? That just basics um, is probably better. And some of the analogies, the dumb farm analogies I use, like planting a garden or planting a tree or even a harvest for corn, it takes time and you have to feed that acreage, right? You have to take care of it.
Yeah, yeah, 100%. I mean, that's I mean that's just I guess at my age now, in my experience, it seems like, oh, yeah, that's a no-brainer, of course. But if I'm honest, and I think back to when I was younger, I wanted everything now. I wanted everything today, and that was before, we had the great big push with the internet and especially social media. Um, so I mean, I think for people today that are growing up with that, growing up with social media, I think it really, you have to really kind of focus. You have to really buy into this idea that things don't happen overnight. And I know, when it comes to crypto, I know there's always somebody out there who's like, oh, yeah, look, I made $10 billion in the last 3 hours. But first of all, a lot of times that isn't true. Second of all, a lot of times it's on paper and they don't take it, they round trip it back down, and usually end up below where they even got in. So they're losing money. Third time is even if they do lock in the profits, usually it was because they were lucky. And it's the same effect that you have with lottery winners, right? Most lottery winners, I can't remember the exact percentage here, but the studies continue to show that most lottery winners, hundreds of millions, tens of millions of dollars or whatever, they're back to where they were 3 to 5 years later. And it's because it was luck. It wasn't because they didn't have a change in mindset. And so, or they scratch off lottery ticket, and you win there and you just go blow the money and you don't have this change in mindset. So you have to have the change in mindset, which means you have to buy in to the reality that things worth doing are going to take time. You have to invest in. And I think it was great what you said earlier about not focusing on today. You're focusing on the future. You're building into that future. And, so again, if you're investing, that means you start investing and you keep investing and you start going, okay, what can I do to bring in more income so that I can invest more? Because most people, again, if we look at it, most traders, 95% of them are out definitely out in 3 years. Only 3 to 5% are actually successful and they stay in for an extended period of time. And so if you look at that and you go, okay, well, first of all, I'm not serious enough when I get in. I don't get the proper education. I don't have the discipline, focus, consistency, effort, and patience to make it work. Those things are absolutely required, but those are the same things that are required in building a business. You have to be consistent. You have to be disciplined. You have to be focused. And what does that mean? Often that means you have to give up some other things in your life. Maybe you're not partying with your friends on the weekends. Maybe you're out there hustling, bringing in some more income, building the brand, whatever you're doing, whether it's investing or building a business and whatnot. But it starts with accepting the fact that it's not going to happen overnight. I mean, that is the reality of it. But social media makes it seem like it's so easy, like everything's so easy, like it should come to you today. And if it doesn't, then it's a scam or, it's a grift or whatever. And then you get the echo chambers in there, right? Because the social media algorithms, they show you what they think you want to see based on how you've responded, what you've looked at, stuff like that. So it just reinforces in your mind that things are scams or grifts or whatever, and it should be with you today. It shouldn't take time, and I think that's probably the biggest. I think that's probably the biggest hurdle for young people today to overcome, because again, you get on social media and things are expensive, things are what they are, but at the end of the day, you've got to go, okay, well, I've got two choices here. Either I can sit here and whine and complain and be upset about it, or I can get out there and I can do what needs to be done to better my position, and understanding that's not going to happen overnight. But if I take those steps required, I can make it there, or I've got a lot greater chance of making it there than trying to do it overnight.
What are you looking up, Gary? What are we looking into as far as stocks go?
Dominance.
BTC.D.
BTC, thank you. BTC.D.
Oops.
Is that a good? I think that's a good pivot, right? Just talk about the dominance on Bitcoin, because I think the trend is your friend, and I think this thing's going to go back to where it came from in this kind of range, in the low 70s, high 60s. What do you think, Chris? Does dominance on Bitcoin start to accelerate here? Well, it already is accelerating, but does it continue this journey? And do the ETFs actually play a role in this dominance becoming more impactful?
Yeah, sure. I mean, I think we hit maybe that 60% area and kind of pull back, and then we start getting some movement through it. But yeah, the ETFs definitely going to play a part in it, because as more people buy into the ETFs have to buy more Bitcoin. So if we continue to see overall net inflows, month to month increasing, generally speaking, I mean, sure, you're going to have down months along the way. It's like anything else. But yeah, as long as you start seeing that continued increase, and that means more Bitcoin are being bought for them ETFs. And what do we know about the ETFs so far? Even with the fact that that we're not having a lot of the really large RIAs pushing them and whatnot, what we saw was over this last almost 2 months, we had like a 5% drawdown of total assets under management across the ETFs. And so what we were seeing was a lot more of our spot Bitcoin holders selling than what we were with the ETFs. So the ETFs as paper hands doesn't seem to be a great reality at the moment. I think they've proven themselves even right now, but especially as we get into those larger RIAs, with the much larger ultra high net worth individuals in them and whatnot, and we get potentially at some point where we have pensions and stuff coming in. These guys are not changing their allocation every month. They're not changing it every quarter. They're in it at least a year. Was talking with Juan Leon over at Bitwise, and he was mentioning that they were seeing at Bitwise, at least a year hold. And so, as we start getting in more and more of these, we're going to see a stronger kind of pull toward that. And so, the Bitcoins and the ETF start getting held for longer, and they pick up more. And so if you're selling, essentially you end up selling into them and other large holders. The whale wallets don't, they continue to buy up as retail's freaking out on social media. It just is what it is. But a lot of that's just not understanding how and why markets move the way they do. It's not understanding what's going on in ranges and stuff like that. So everybody freaks out, and you think they get tired of being, Chicken Little for a month and a half, 2 months when prices just ranging. But there they are. It still happens.
Yeah. So you think this dominance does what? It continues up into the 60s?
Yeah, I think it probably gets around 60, lower 60s there. I
I
think
mean,
that's the
that's
real
an
point to
eight,
kind of pull that.
that's an 8 to 10% move. I mean, what does that mean in market cap? That means I don't know how to do the math exactly on that. It's not linear, but another 8% move would add, is that adding about 4 or 5% to the total market cap for to achieve that?
So I think probably something like that.
Yeah. I mean, that's $500 million, man, $500 billion
Yeah.
in the
Uh,
60s, or the altcoins get crushed, right? Or both.
yeah. And just because Bitcoin rallies doesn't mean altcoins can't rally with it. We can see Bitcoin rallying at a greater clip than altcoins in general. A lot of people think that Bitcoin has to rally and alts have to drop, and as we've seen since Q3 of last year, that isn't necessarily the case. We've got again with alts that have been rallying, many of them hundreds of percent, if not thousands of percent or more, depending on what they are, especially meme coins, right? Rallying alongside of Bitcoin. And again, I think that takes us to this thing that we've talked about multiple times before, which is this idea that things don't work or aren't necessarily happening the same way this cycle as they've done in previous cycles. I don't think you get this opportunity to get out at Bitcoin highs, cycle into alts, run through them, and then get back in as Bitcoin is pulled back to rally, ride it back up. I think you're going to have to, if you get out of Bitcoin at these highs, to get into alts. If they're rallying, I think at some point when you finally pull out, Bitcoin's going to be higher, and generally speaking, you'll have to get in higher. But then, again, as you've pointed out, Gary, then you've got to do, it's not just simply, well, my alts have rallied more than Bitcoin, so I've got extra cash, so I get in, and maybe I break even on my entry back into Bitcoin. But then you've got short-term capital gains, and all of a sudden that eats if you're in the U.S. especially, that eats out a whole lot of those profits you had, and the likelihood is that you come back into Bitcoin, ultimately paying more than what you had gotten out at, because let's face it, most people out there trading are not successful traders as it is. So these are the realities. If you're trying to cycle into Bitcoin and out into alts and then back into Bitcoin, I think that's one of the things you're going to have to watch for, especially as Bitcoin pushes out to new all-time highs once more. Unit bias, that's the term. Yeah, somebody just popped that there in the
That's it.
in the chat. Who is that? Niz Jazz BTC. Thank you so much. I appreciate that.
Yeah, unit bias. I mean, it's just a dumb thing, right? And I've been guilty of it. It's just the poor education. Um, now that I know how to share my chart, you guys will see that I'm now hitting this button as often as possible. I'll burn out my interest in doing this, but this is the NVIDIA chart. I know I bring up Berkshire Hathaway, but just for the audience, just to make sure that we really understand what Chris is saying about maturity, time duration, the way you're thinking about investing. Investing and trading are different. They are completely different activities. When I'm like Node 40, I'm building a company that's going to have in 3, 4, 5, 6 years more income and more opportunity than it does today. So it's going to be a smaller company today. And if I just look back here, 2018, 2016, I started looking at Bitcoin, and NVIDIA was $26.47. There's two things we need to look at. First off, it was $26.47. I don't know what the market cap at that time was, but it was tiny. Two, I'm going to roll this chart back. This company has been around since 1998. Okay. 25 years old. Bitcoin's 15. Okay. So Bitcoin started popping up around here at zero. Oh, wow. NVIDIA was worth $1.97 to $4.20. Today, NVIDIA is worth $900. Okay. So I started investing in Bitcoin in 2018 at $8,000. This NVIDIA was at $60. Now it's at $899, going to $900, going to $1,000, $2 trillion market cap, 60 that goes into 900. Guys, that is a monster return, but it's taken 15 years. Okay.
Yep.
I don't think that Bitcoin's even started on their journey here. I think we are here, right here, man, in the 18-ish terms of NVIDIA. Okay, maybe even here. It's $135 going to 900. So I'm going to continue to beat my drum on this Bitcoin dominance. I think Bitcoin dominance goes back to where it started, which was in the 90s. It must head back there because this is a very different asset than all these other tokens that we're talking about. It's just a very, very, like there are no rooms attracting 8,000 people on blah, blah, blah coin. Yeah. Okay. And having good theological, ethical, moral, and financial conversations around the topic. I can't get over the incremental value I think that Bitcoin's bringing to society that we don't really talk about very much. And I appreciate that we don't talk about it because it can get a little weird sounding that people are getting excited talking about a financial tool or a financial asset in almost a religious or social manner. So anyway, I just want to show these charts. These are super performers here. Berkshire, super performing. NVIDIA had tremendous vision. These shareholders held this stock for a long time with pretty shitty returns. Okay, but if you held the whole time, right? I own this stock at $70 and sold it. I sold it because I got margin called on Bitcoin. So I could have gotten a 100x out of this. Instead, I put it into Bitcoin. In reality, that was time-wise, that was a bad move for me. Okay. But I do not regret it. I'm in Bitcoin. I'm very happy with it. And now that NVIDIA has done this and I missed the opportunity, it only validates my view on Bitcoin even more. And then I look at Berkshire Hathaway and go, wow, this one worked too. So I don't believe in this. Hey, the returns are going to get smaller. How can the returns get smaller when you're bringing the biggest money on planet Earth into the market?
I mean, how do you kind of change that mindset for some people then, Gary? I mean, thinking back to when you were, deciding not to invest in Berkshire Hathaway, right? Like, what do you wish? Like, do you wish there was like a Gary Cardone channel you could have listened to at the time? Like, how do you make that switch in mindsets? Like, can you make that early? Do you have to get that with experience and time?
Yeah, I wish there would have been somebody to slap me silly and literally go, "Hey, you're an idiot, dude." Like you're thinking. Look, I grew up on the wrong side of the tracks. Nobody educated me on how to do any of this. And my bitch about this social media stuff is that you have too many people that can just come on here and say shit, but it doesn't make it right, right? So that's why I use really simple analogies like growing a tree. You do not expect, unless you're going to go buy $100,000 palm tree. Now, if you want to buy a mature $100,000 palm tree, you're going to need about 40 of them in this yard. But most people don't have that kind of money. They're going to grow it. Okay. They're going to build it. And the world has gotten a little like, I got to have everything right this second. And that's why you're broke. Yeah. Okay. I'm not broke. Okay. I never, ever worry about money. Like never. And we started this conversation off with freedom. I think we have lost the ability to understand economics, finance, and freedom are extremely correlated. Okay. If we went into if we went into a high school today and said, hey, what does freedom mean? I don't think most of the people would define it the same way. But I define it one way: the ability to say no. Yeah. I don't have to put up with your shit. And the ability to say yes to anything. Now, that is the ultimate freedom, right? I can say no and I can say yes. That means I have to have enough money to be able to defend my no and defend my yes. Right? And so, like, we can get all religious about it and philosophical. Freedom is literally the ability to say, fuck off, Or let's roll, baby. Let's party. Let's go to Prague on a private jet and hang out and have a party if that's what you want to do. That to me is freedom. Once we agree on what freedom is, a lot of this stuff gets pretty simple.
Did you have the same concept about freedom and finance when you were younger and thinking about the Berkshire Hathaway investment? I mean, was that idea still there, or did you recently kind of come to terms with that?
No, I couldn't articulate it, and I wasn't mature enough, and I didn't have enough education, and I hadn't lost enough. I hadn't made enough stupid mistakes. One of the, like, my brother asked me once, "Hey Gary, why do you talk about your mistakes?" Because, dude, I learn more from my mistakes than I learn from my wins. Okay, all somebody that wants to talk about their wins all the time, their egos are fucked up. Okay, like they're dangerous to me. I hate people that tell me they've never had a loss. You show me a guy that took a $50 million loss or a $5 million loss or a bankruptcy and he recovered. He recovered. That's the key, though. Say, could you pivot and recover, or do you do a David Hill and the price goes down $3,000 and you puke up, right? Because your conviction wasn't correct in the first place. And if you're sitting there looking at the chart and you're all worried, your core conviction on your investment's incorrect. And Chris will tell you that all day long. Chris knows I'm not looking at these charts. Well, Sam, you were in here the other day. You were like, whoa, man, Bitcoin's down $8,000. And I just turned and looked at you and went, do I look fucking worried? Right. And you were like, you actually looked at me like, wow, you do not look worried. Well, that's a really good investor, dude. Like, I'm scrambling around trying to figure out how to buy some more. Fuck worried. I'm trying to figure out how to get rid of that damn silver. Right. So that to me, and that makes you really comfortable watching an older guy. You're looking at that going, man, this cat is freaking convicted. Right. And so these conversations are really good when they're mature, and there's no shillers on this program. Ain't one of us making any money from doing it. And the Bitcoin community isn't sending me Bitcoin to promote Bitcoin. I'm promoting Bitcoin because I think it's the best asset I've ever seen in my freaking life, and it's expanded my universe of communication and connections, which I think that's all what money is, really. It's the ability for me to exchange value with Chris for what he brings to the world. Okay. Or maybe in this case, we're trading currency. Our ability to communicate our experiences is also currency. It's like current electricity moving between two poles. These are really valuable things. That's the only reason we use money, man. Yep. Is to exchange the value and go, hey, I appreciate you. Thank you. Okay. So yeah, no, I couldn't have articulated. I had to go through 25 years of seeing how physical commodities work. Okay. Real world assets, physical commodities moving through pipelines and grids and being stored. What does that cost? The Bitcoin miners are sitting here going, hey, we have to make money. Well, go tell that to ExxonMobil, because they ain't making money at $1.75. Okay, that is bullshit. People that resources don't always make money. It has nothing to do with the economics of supply and demand. Stop drilling, stop mining, and the supply will change price. In the case of Bitcoin, it's really cool because it can't be synthetically manufactured or accelerated. In that, like, I'm more concerned about the whales holding 40 or 50% of the volume off the market because their cost base is so low. There's no incentive for them to do anything. That is more concern to me than anything else in the Bitcoin market. But I believe in markets. See, so I think price will rip those coins right out of their hands at some point, and there'll be a reaccumulation into different hands, and those whales will now invest in other projects, infrastructure, real estate in probably the crypto world, and the old legacy players are going to come in and invest in the Bitcoin industry. It's awesome. It's very symbiotic. It shouldn't be frightening. It should be awesome. This is what adoption looks like.
Chris, what are your thoughts? I know we're coming up on 11:45 here, so we want to begin to slowly wrap up. But before Gary kind of went on some of that information, I also wanted to ask you, like, when you had a transition in mindset from equating freedom to finance, because obviously was Christopher Inks of 10 years ago like that?
Yeah, no, same kind of path. I mean, I didn't grow up with anything that I have now. Just a blue collar family. My dad was made a career out of the Navy. So he was in there 22 years. So I grew up, in that structure and in that. And I think the fortunate thing for me was that I was able to, unlike most young people, I was able to experience other cultures in other countries and their laws and things like that, at a younger age. So that might have helped me a bit more with understanding, but still being young, when I first got into trading and investing back then, it was nowhere like the way I think today. It was still very much, how quick can I do this? So when I speak out there about trading and I mention these things, sometimes people get a little butthurt, and it's not meant to ever kind of make somebody feel bad. It's meant to be like, listen, I've been there. I know exactly what you're going through. I didn't skip any of this. But the story is I had to figure out, okay, now I got to get serious about it. And so in doing that, I learned really I learned a lot more about discipline and focus and consistency. And some of that was playing sports growing up as well. I think that can contribute a lot to it, because you have to show up. If you're playing football, you have to show up twice a day, for your 2-a-days. In Texas summers, that's like 100 freaking degrees on your second one. It's 90 degrees in the morning, 105 degrees in the afternoon. And you've got to do that day after day. You've got to show up for practice. You got to show up for games. You can't let grades slip, otherwise you're off the team. So, that kind of helps a little bit, but until you get especially in the markets, I think for most people, it's what Gary's saying, it's losing a significant amount at some point. And at that point, you have to make the decision, okay, I'm going to do something different. You have to make the decision. I talk about this all the time. Before you can change, you have to acknowledge that there's something that needs to be changed. If you don't acknowledge that there's an issue or a challenge that you're facing, nothing's going to change. Second thing is, once you acknowledge it, you have to go, okay, now how do I move beyond this? You've got to create a plan. You've got to create some sort of structure. Most people never do, number one. They never even admit they have an issue. Of those few that are left, significantly less actually create a plan to do something. And of those that do, significantly less of those actually do it and follow through. Again, that becomes that discipline, that consistency, that focus, that patience. If you don't admit that your YOLO trades into shit coins are not going to get you where you want to go, if you fail to actually admit that, you're not going to get there. You will not get there. And here's the thing, even if you get lucky, as I mentioned earlier, the odds are you're not going to take profits, or if you take profits, you're going to end up losing it all again anyway. This is statistically significantly the greatest likelihood of what happens. Again, that doesn't mean you can't learn to trade. Trading has been great for me, but you can't do it with the mindset that most people have in the markets right now, trying to get rich overnight, not understanding that you have to learn correctly, that you have to put in all that. Again, I'm going to say it again: discipline, consistency, focus, and patience. You absolutely have to do that. So for me, again, it wasn't until I figured that out, and that was, for those that have heard my story, that was probably, 3-4 years into actually starting my journey into trading and investing. I lost a lot of money prior to that, a lot of money. But once I figured that part out and I started doing those steps I talked about, it didn't happen overnight, but it changed my mindset. I started focusing on where do I want to go rather than where am I at? Instead of worrying about today, the only thing I worried about today is what can I do today to get me to that longer term, 5 years, 10 years, 20 years, 50 years down the road. And that is honestly what really, if I hadn't done that, I would not be where I am today. So 100%, I didn't start out like this. It had to be learned. I didn't have the education. This stuff I'm talking about here, again, I started before, right when the internet really kind of came out, AOL's unlimited package, your 33.6 baud modem kind of thing for $21 a month or whatever it was. That's about the time that I really started kind of getting, into trading back then. And, nobody can do it for you guys. You got to get out there and do it yourself, but you have to recognize that it needs to be done. And then you have to take those steps to do it. Otherwise, you're going to be like most people, I guess they're whining about how bad life is and how terrible everything is, rather than taking the other option, which is doing something about it. And we can all do something about our situation. It's all in I hate to sound cliche here, but it's all in your mind. You have to decide that you want to do something.
Yeah, that's great advice. I mean, really, even as a young guy, hearing you and Gary talk about that is just like, you got my mind spinning in a bunch of different ways. And I'm like, oh, like it's really practical. And I think that's some of the stuff that a lot of people miss. Is a lot of people who are commenting on this stuff are really just focused, like we focus on the charts and on the money, but when you think about like the planting the tree and growing it and what that actually takes, no one else really talks about that. And when you have that mindset, then it all makes sense. And you're like, oh, okay, why am I in this? What am I doing? And I think that's something that you really, not a lot of people understand, not enough people understand.
Yeah, 100%. Again, I think it's just generally, again, just being young, and especially if you're male, both of you guys know this. I know Gary can remember back when you're in your teens and your young 20s, you're invincible. The world is your oyster. You can do anything. That's how we feel, right? And then things happen and things change, and you kind of get to that point, and most people decide to let that dictate what happens to them rather than deciding, okay, I'm going to do something about these things that are happening. I'm going to control what I can control. I'm going to focus on the things I can change rather than focusing on the things that I can't change. And that's why I think, success and just growth as a human being isn't really, I would argue that very few people in the grand scheme of things actually grow as people. They actually become successful in whatever it is they want to do, but it's because they sit there and focus on the things that they can't change. And they don't focus on things they can. And, a lot of that is just the way we grow up. And I think, again, now that we're into the internet, now we're into social media, it's easy to get caught up in those echo chambers where life is crap. Everything sucks. We're all doomed. Can't do anything about it. We're all victims. But, I would just want to say, anybody listening out here, if that's really how you're feeling, because a lot of people feel that way, understand that you can do something no matter how bad your situation is. I've met so many people. I've been fortunate enough to meet so many people over the last 30 years that have really come from just absolutely nothing or worse, really bad situations, and have done for themselves just absolutely amazing things. And the only thing truly special about them was that they decided they wanted to do it. They focused on what they could change rather than focusing on what they couldn't change in their current situation. And it didn't happen overnight. It took steps. They focused on the big picture, the same thing we've talked about this whole show here, rather than focusing on, oh my God, here's the roadblock today. I can't do anything else.
Yeah, and listen, we're just about out of time. We got to start wrapping up. Gary, do you have any closing comments just based off of what Chris said, or any last piece of advice?
Yeah, listen, I really like the way this show is going, that we're not just spending time looking at charts. I won't do that for the rest of my life on Bitcoin. But I think this conversation about investing, trading, and building businesses. Like these are really, really important subjects. And I think if we get the definitions right and we don't convolute these messages, okay, investing and trading are different. Saving, I never save money. Okay. Saving money is dumb. Investing money, this is what I like about Bitcoin. It forces me into a investment um, vehicle, and quite frankly, the one of the greatest benefits to me to cold storage is that it slows down your ability to pull the trigger and get out of a trade. Like to me, that is a really cool value. Now, I've seen so many people lose their shit that I'm not suggesting, look, get into Bitcoin. I don't care how you get it, dude. You can buy Coinbase, go into Coinbase, do it through MetaMask, buy it from your doctor. I don't really care how you get it and how you store it. What I think is you just need to get in it first. And then you begin to understand, I don't go on the roller coaster until I buy the ticket to the carnival. Okay. So like I got to buy the ticket. I kind of check the place out and I figure out what I do and don't like. If you just keep it simple, man. Okay. This is not any different than like raising a child. Imagine you have a 3-year-old, that the IQ is going to be awesome. And then tomorrow, he shits his diapers and you decide, I'm going to dump this kid because he doesn't know how to hold his bowels. Come on, man. Like he's going to have a bad day. Okay. Does not mean like you would have shorted me when I was 16. You would have sold me into oblivion. Okay. Because I look like a complete idiot. So just because there was noise there did not make me unvaluable. Okay, what it needed was I needed direction, man. Look, I think most people are geniuses. They're artists. They're like F-15 fighter jets, fully loaded, fueled up, missiles. They don't know how to fly the damn thing. Okay, just basics. I don't know how to fly my own machine. So understanding yourself, if you're trading and you don't do a lot of psychological internal look, I think you're going to die, dude. Like you go check Bill Ackman, all these big traders out, Paul Tudor Jones, they all have done a lot of time with shrinks. I guarantee you. Okay. Looking inside, trading will give you religion. Like some of the most philosophical people I've ever met in my life have been very large traders. Also, some of the sickest people I've ever met in my life have been really high volume traders. So this is a great world, great life. Don't tell me you can't buy $70,000 Bitcoin. You can buy $700 worth of Bitcoin right now. And remember Berkshire Hathaway. Gary Cardone today would have $12 million of Berkshire Hathaway if I would have invested my 1-year salary when I was 27 years old into Berkshire Hathaway. But I was too cheap, didn't understand it, had unit bias, value bias, I had dollar bias, and I was completely stupid about value. And price and value are not correlated often. They're usually really wrong. Because unlike most people, I don't think markets are right very often. I think markets are mostly wrong all the time.
Yeah.
That's just the way markets work. So anyway, we've gone on too long.
No, that's a great closing comment. We're all out of time. So appreciate everybody who tuned in. Thanks, Chris, as always, for coming on. I always love picking your brain. And thank you, of course, Gary, as well. And we'll see you guys, next week?
Yeah. And you guys, if you guys like this space, let us know what you do like and what you don't like and the format, because we're pretty flexible on how we deliver this. And if you want other people to come on and talk about subjects, we need the feedback from you. We don't know. We're just guessing. So thank you, Sam. Chris, as always, buddy, thank you. Sorry we took up so much of your time. I'll send you some cigars.
Sounds good, man.